Okay, everyone, welcome. So I'm not gonna say much, but what this video is about is about the conventional way people use risk. And when I first started trading, I was told that I should only look for 1 to 2 risk reward or 1 to 3 risk reward. Like sometimes they would also say like I should be focusing on 1 to 4 or 1 to 5. But let's face it, like a lot of us when we're trading, and sometimes you can get 1 to 2 risk reward, 1 to 3. You do get it, but how often are you getting 1 to 4? How often are you getting 1 to 5? Because a lot of time what happens is like you're gonna have this 1 to 4 risk reward, and something that we're gonna talk about over here in a bit. You can have 1 to 4 risk reward, price will go in profits, and as price goes in profits, it's almost at that 1 to 4 level. It's almost tapping into it, but then something in you says, okay, I'm going to wait, and you wait, and the whole thing just retraces back to entry. How many times has this happened to you? Same thing with 1 to 3, 1 to 2 risk reward, that you're so stubborn that it has to hit 1 to 2. If it doesn't hit, it's not a trade. You don't secure profit. Price comes down, comes to break even, goes in in a drawdown and hits your stop loss. Like how many times has that happened to you? It used to happen to me a lot, because I'd be really stubborn and I would stick to 1 to 2 or I would stick to 1 to 3. Right now, the sort of risk reward I use, mostly it's 1 to 1. It's not 1 to 2, it's not 1 to 3, because I personally think risk reward doesn't really exist, because risk reward is all subjective. It's based on where you think your stop loss is going to be. It's based on where you think your take profit is going to be, right? So let's go over an example right over here, right? So you see this chart. This is a 30-minute chart. You can see how we've created some sort of a support right over here on the 30-minute time frame, right? We have a support at 30-minute time frame. Now someone can say that, okay, we've had a move down, and this move down has been around like 140 pip move down. So if we have a 140 pip move down, there's a probability that price can retrace. Maybe we can retrace up till 26.45. That's like an 87 pip range. So if we're retracing at this point, I've opened up my on-screen magic keys, because my physical magic keys, the batteries are dead, I have to charge it. But I've opened this up just to show you, right? Okay, now take a look at this. If I have my take profit right over here, and if I have my stop loss below this wick, my risk reward is 0.65. Like it's a negative risk reward at this point, because I'm gonna lose more and I'm gonna make less. To me, there's nothing wrong with this. I'll still execute on a negative risk reward. What most times guys are gonna say is they'll say, okay, what? I'm gonna aim for 1 to 2 risk reward. So let's take a look at this 1 to 2 risk reward at 1% risk, right? So now the risk is 1%. You can see the numbers. 1 to 1 risk reward is going to be right over here. This is 1 to 1 risk reward, where you're risking 74 pips in order to make 74 pips based on where the entry is right over here. But if someone comes along and says, okay, what? My risk reward is 1 to 2, because that's my trading plan. That's what my mentor told me. And then you're going to go with 1 to 2. Okay, let's take a look at this 1 to 2. 1 to 2 is going to be somewhere over here. So this is your 1 to 2 risk reward. You're risking 78 pips in order to make 155 pips. Now, ask yourself this question. How many times have you executed a trade at 1 to 2 and it has hit that 1 to 2 target? How many times has that happened? What's the probability this is going to happen right over here? So when I take a look at this, I'm like, hey, listen, if you're targeting 1 to 2, even if your 1 to 2 comes right over here, and if 90% of the time, let's not say 90, if 60 or 70% of the time, price comes to your area to hit take profit, but instead of hitting take profit, it comes back down to break even, and then it goes in drawdown and hits a stop loss. If that happens 60 to 70% of the time, that means that out of that 60 to 70% of the time, 100% of the time, you can secure profits. You can secure it 1 to 1 and leave the rest running. Doesn't matter, man. Who cares? Look, if I'm gonna have a 1 to 1, let's say my 1 to 1 was right over here. if my one-to-one is, let's say, right over here, right? One-to-one risk reward. If my one-to-one is right over here, I'm going to be okay with that. I don't want to aim for that 1-2 or that 1-3, because you got to be able to grind out small wins. Because if your one-to-one is right over here and you're actually making something back, that's fine. Another thing is, when guys say, okay, like, you know what, I'm going to enter, like, let's take a look on the 15-minute time frame for like better candle structure. So let's say we're looking at the 15-minute time frame and someone is planning to enter right over here. If you're planning to enter right over here, your stop loss is about like 46 pips. You're trying to win like, 54, 52 pips, whatever. But if your take profit is smaller, if you have a negative risk reward to begin with, and you execute the trade. If you execute the trade at this point, what happens when you move your stop loss? Now your risk reward is 1-to-1. So this is the problem I have when people say, you know what, Raja, my trading plan says my risk reward is 1-3, and I'm going to stick to 1-3. I don't want to execute a trade because it has a negative risk reward. I don't want to execute on it. That's the problem right over there. So, for example, I took a trade earlier on. It was a sell trade. Let me show that to you over here. Go to viewing options, deal map. All right, let's take a look at this right over here. So this is a sell I took. Sell, fell about 18 pips. So when I took this trade, on this trade, if I take a look at this, let me bring up the marker. This is where price was already falling. We had closed below this area. Over here, my stop loss was right up over here, and I was aiming for maybe around 26.48. And even though this was a positive risk reward, as soon as price broke below this wick, I brought my stop loss right above this candle. Now, when I moved my stop loss, my risk reward went from 1-to-1 to 1-to, I don't know, like 1-to-2 at this point, because your risk reward is always subjective. You can't really say that, oh, my risk reward is going to be like, highly positive and like, I'm just going to execute on that. No, that's something which you have to unlearn about risk. Risk is not about aiming for these like, scenarios where you get, like, say, for example, this is like 1-to-2.5, or if you tighten up the stop loss, you say, okay, like, what, now my risk reward is 1-to-4. You see the RR, 1-to-4. How often your 1-to-4 is going to hit? How often? How much? How many more trades are you going to lose this way? Because if you look at all your trading history, look at all the trading history, look at all the trades where you had 1-to-4 risk reward, or where you had 1-to-3 risk reward, you're going to find out most of them cut you at break even. Which means if you look at those trades, you could have easily, like, let's say if I keep my stop loss right over here, you could have easily secured 1-to-1. This is 1-to-1. You could have easily secured 1-to-1, and then you could have let 10% run. And if that 10% runs all the way right up over here, that's also good, because now you're still in the trade, because you're gaining confidence in letting trades run. Like a lot of you guys, you will have good analysis. You will have great chart markups, and you say, okay, like, what, I'm expecting price to, like continuing to push all the way up. You're going to get in the trade, you're going to get to 1-to-1, or you're going to get in some sort of a profits, and then you're going to start to, like, panic a little bit. Man, like, what, I want to secure profits, I want to secure profits. You're going to secure profits, price will hit your targets, and then you'll say, you know what, like, I missed this trade. So having 1-to-1 risk reward is not a bad thing. If you think price will reach your like 1-to-4 target or 1-to-5 target, you can still do that. There's no problem with that at all. But I'm going to tell you one thing I really like about Magic Keys. So take a look at this. I don't want to open up a wrong lot size, but just for like explanational purposes, let's open 0.5. 0.5 lots. Let's do it for like a buy trade. All right. So buy trade is executed now. You can see right over here, 0.5 lots is running. Right over here, well, 0.5 lots is running in a buy. I can, like, I can change the stop loss, bring the stop loss down, bring the take profit up. But if I want to close 50%, see the entry right here. 0.5. If I want to close 50%, if my magic keys was charged, I'll hit close half and close 50%. Over here, we have this, so I can press this and you'll see it's going to close half. So it closed half right over here. 0.25, you can bring your stop loss at, break even with this entry. Like, you know, if I bring it to entry, it's going to close the trade, but I'm going to just close full right over here. So like, you know, Magic Keys helps with risk management a lot. But still, re-watch this video, watch it again, and like, you know, you're going to understand how your risk reward has to be subjective. Don't be stubborn with this 1 to 5 or 1 to 4 or 1 to 3 risk reward. It works in theory, in hindsight, but when you're trading live and your emotions are connected towards the money you're making or losing, it's a whole nother deal. Okay, hope this was helpful. I'll try to post consistently, but like, you know, things happen. But anyway, take care, guys. Good luck.